Hello friends, Christian Carter with Radius Financial Group, and today we're talking about the VA loan, and we're talking about a veteran buying a multifamily property, and we're talking about how we can use the income from that multifamily property, the rents, in order to help that veteran qualify, right? Now it's very, very difficult to do, doesn't happen a lot, but in order to use that rental income, from a property that a veteran is buying, we're going to need two things, right? So let's dive right into it. Let's talk about those two things. I'll give you a hint. The first one is Landlord Experience, and the second one is cash reserves. But we're going to break everything down. And of course, at the end, we're going to go over a quick example just to explain things further. Let's get right into it. All right. So first of all, and this should really go without saying, if you don't know what the VA loan is, the VA loan is probably the best loan out there. It's for active duty service members, retired veterans, anyone who is veteran status. Some surviving spouses are eligible for the VA loan. If you're in the National Guard and you've been on deployment, or you've served 6 years in the National Guard, you'd be eligible for the VA loan. Long story short, it's a great program. 0% down payment, no down payment required, no monthly mortgage insurance, which is awesome, saving you hundreds of dollars a month. And then lastly, a nice low government-backed interest rate. So it's an awesome loan. All right, so let's talk about the first one up here, Landlord Experience, right? In a nutshell, this is just like it sounds, right? If a veteran is buying a multifamily property and wants to use some of that income that is going to get generated by that property, if he wants to use that income in order to help him qualify for that home, he or she is going to need Landlord Experience, right? Now, the easiest way to go about this is, let's say the veteran owned, a multifamily before, or, rented out a home before. He or she has been a landlord before. Easy enough. That is considered Landlord Experience, right? Now let's get into the more difficult part. What if this veteran has never owned a home, never owned a piece of property before? How could they possibly have that landlord experience, right? Well, there's a couple different ways. So landlord experience could mean, you've worked for a property management company, or you actually were a property manager for a certain amount of time. We could even almost say that, if you were in the construction field at one point, and you were constantly dealing with landlords and dealing with tenants and things like that, that might be considered landlord experience. So when we talk about landlord experience, right, and the veteran needing to have it, the easiest way is if they've owned an investment property or multifamily property in the past. That's easy. But the other way is basically we want to make sure that this veteran is going to be set up for success when he or she buys a multifamily property and is going to be managing tenants, right? So we just need to be able to prove that. So the first one up is Landlord Experience, and the Landlord Experience must be in addition to cash reserves, right? So you've got to have Landlord Experience and cash reserves. You can't just have one or the other. Now, when we're talking about cash reserves, I mean cash reserves. And what I mean by cash is straight up cash, kind of. So what we're talking about, we're not talking about retirement accounts like a 401k or a TSP. We're not talking about stocks. That's not going to count as cash. We're not talking about a mutual fund account. That's not cash. We're not talking about a gift from a family member or a relative that you deposit into your bank account. We're not considering that cash. We're also not really considering true cash, meaning if you have a bunch of cash under the mattress and you just decide to deposit into your bank account the next day, we can't use that. So when I say we need cash reserves, this is what I'm talking about. I'm talking about money in a checking or savings account that has been in that account for a reasonable amount of time, right? So when we say cash reserves, no retirement accounts, no 401k, no TSP, no money from your uncle, no money under the mattress, none of that. We're talking about straight up money that is in the veteran's checking account or savings account, right? All right, now how much cash reserves do we need? Typically, we're going to need about 6 months worth of the PITI. Now, if you have no clue what I just said right there, don't worry. We're going to head to the whiteboard and we're going to explain a couple things real quick for you. All right, it's whiteboard time. Let's go over some quick examples, shall we? All right, so first off, we're going to hit on cash reserves, right? So we talked about we needed 6 months worth of PITI, right? And of course, PITI stands for principal, interest, taxes, and insurance. Think of PITI as your monthly mortgage payment. So in order to close in order for a veteran to buy a home and use the rental income from that home to help him or her qualify, that veteran is going to need to show 6 months worth of mortgage payments in cash. Right? Now, how we get this is, let's say the monthly mortgage payment is going to be $2,000 per month for a 2-family, right? So the monthly mortgage payment is $2,000 a month. If we need 6 months worth of reserves, we're simply going to take that $2,000 mortgage payment, multiply it by 6, and of course we get $12,000. So that means if a veteran is buying a 2-family and he or she wants to use the rental income from the other unit, right, the unit that the veteran is not going to live in, wants to use that rental income as qualifying income to help him or her qualify for the mortgage, then the veteran is going to need to show $12,000 in cash reserves. This is very important. This $12,000 in cash reserves, this is after the veteran closes on the home, right? Meaning, so just because you have $12,000 in your checking account does not mean that you might meet this cash reserve requirement. Because if you're making a down payment, if you're paying closing costs, things like that, you need to have this $12,000 in the bank after you pay for all the stuff that's going on with the closing, right? To include down payment, closing costs, things like that. Hope that made sense. But after the closing, that veteran needs to have $12,000 in the bank, not under the mattress. All right, next. How do we determine the monthly rent, right? So real quick, the appraiser is going to determine how much in fair market value that the veteran can get from the other units within the property that he or she is buying, right? Now, this is important to note. When the appraiser comes back with the appraisal or the certificate of value, which it's called in the VA loan, we're only going to be using 75% of the projected monthly rent to help that veteran qualify. Now, what does that mean? Let's go back to the previous example. A veteran is buying a 2-unit property, right? So the appraiser determines that the unit that the veteran is not living in, the veteran can rent out for $1,000 a month, right? So we're going to take 75% of that $1,000, which is $750. So when this veteran goes to qualify or go through the mortgage underwriting process, we're going to add $750 to that veteran's income to help him or her qualify for that 2-unit property. All right, that is all she wrote. I hope you enjoyed this week's video. If you did, I would love it if you can give it a big thumbs up down there. More importantly, if you want another video topic covered, whether it has to do with the VA loan, whether it has to do with really anything mortgage or real estate related, please leave it in the comments below so that I can make a video on it. And of course, if you tend to like most of my videos, I would love it if you could subscribe to my channel. It really helps me out. But other than that, like I said, hope you enjoyed the video, and I'll see you next week. Adios.